Hello students, welcome you all back to the problems of insurance claims. So previous session we have completed 8 problems on insurance claims. So in this topic of insurance claim we have to calculate how much is the stock destroyed by fire and how much is the claim to be lodged with the insurance company. So in the first 8 problems, we have done simple problems. We don't have much complications. Now today's video, we are going to do a little bit complicated problems. Some new provisions will be applied. When stock was valued not at cost, we have to bring it at cost. Similarly, when average clause is applied, how to find out the claim to be lodged with the insurance company. So these are the topics we are going to discuss in this video. Hope you have got the problem set from the link under the description. So every student, the viewers, those who are watching this video, you must have a hard copy of the problems from the link under my description. So assuming that all the viewers are having the problems, because without problem you cannot understand. So my suggestion, get a hard copy of all the problems and keep it ready before watching the video. Come on, let's begin the 9th problem. See the 9th problem. Fire occurred in the premises of Amir Chand on 10th April 2004. Remember the date. Concentrate on the problem. Understanding the problem is half solved. Normally students will give concentration only to the solution. No, first you understand the problem. Now, fire occurred in the premises of Amir Chand on 10th April 2004 and a considerable part of stock was destroyed. Remember the date, 10th April 2004, date of fire. The stock salvaged was 50,000. So this salvage value we deduct from the stock on the date of fire. A fire insurance policy containing average clause was taken for rupees 3,60,000. In theory class I told you average clause is applied for discouraging for making underinsurance. In order to reduce the premium, normally people will make underinsurance. So if they make underinsurance, then actual loss will not be indemnified by the insurance company. जितना लॉस होगा पूरे लॉस को इंडेमनिफाई इंश्योरेंस कंपनी नहीं करता अगर अंडर इंश्योरेंस करे तो. अंडर इंश्योरेंस का मतलब द पॉलिसी अमाउंट इज लेस देन द स्टॉक ऑन द डेट ऑफ फायर. स्टॉक ऑन द डेट ऑफ फायर 5 लाख है और इंश्योरेंस पॉलिसी लिया 4 लाख रुपीस की. पॉलिसी अमाउंट 4 लाख, इसको अंडर इंश्योरेंस कहते हैं. अगर अंडर इंश्योरेंस कहे अगर हो गया तो उसके बाद average clause will be applied. When average clause will be applied, the total loss will not be compensated by the insurance company. Partly it will be reduced. So here the new point is average clause is applied. Policy amount taken is 3,60,000 to cover the loss of stock by fire. You are required to ascertain the amount to be claimed from the insurance company. Finally, we have to find out how much claim to be made from the insurance company. Now data given. Purchases for the year 2003. Now see, actually fire occurred on 10th April 2004, but the data is given purchases for the year 2003. That means we are required to make a trading account of 2003 to find out the rate of gross profit. तो लास्ट ईयर का ट्रेडिंग अकाउंट बनाएंगे और रेट ऑफ ग्रॉस प्रॉफिट मालूम करेंगे. दैट रेट ऑफ ग्रॉस प्रॉफिट वी अप्लाई इन द करंट ईयर 2004. Right? So purchases for 2003 last year, then sales for 2003 last year, stock on 1st January 2003, opening stock of last year, stock on 31st December 2003, closing stock of last year, wages paid during 2003, last year's wages. Complete data is given for 2003 and purchases from 1st Jan 2004 to the date of fire, so current year. करंट ईयर 1st जनवरी से लेकर 10th अप्रैल डेट ऑफ फायर तब तक परचेजेस गिवन 6,60,000. सेल्स फ्रॉम 1st Jan 2004 टू द डेट ऑफ फायर 10 लाख. वेजेस पेड ड्यूरिंग 2004 अप टू द डेट ऑफ फायर 1,50,000. तो वी आर गिवन द डाटा फॉर 2003 as well as 2004. Fire had broken on 25th December 2003 and had destroyed stock to the estimated cost of rupees 90,000. Not only this year, last year also some fire occurred and 90,000 worth of goods were destroyed last year. So while making a trading account of last year, we take stock destroyed by fire on the credit side of trading account. Credit side of trading account. And there was a practice in the concern to value stock at cost less 10%. But this practice was changed and the stock on 31st December 2003 was valued at cost plus 10%. Now in this problem, in this business, the stock is not valued at cost. The stock is valued 10% below cost on 1st January. On 31st December policy changed. On 31st December closing date, the policy changed. Now cost plus 10%. तो ओपनिंग 1 जनवरी को पॉलिसी ये थी कि जितना भी कॉस्ट रहेगा उसका 10% कम करेंगे. 100 रुपीज अगर कॉस्ट है तो 90 रुपीज वैल्यू करेंगे. 100 रुपीज अगर है तो 90 रुपीज वैल्यू करेंगे. लेकिन एंड ऑफ द ईयर में 10% ऐड करना है, कॉस्ट प्लस 10%. दैट मींस 100 रुपीज अगर कॉस्ट है तो 110 रुपीज वैल्यू करेंगे. कब? एंड ऑफ द ईयर. ये 2 पॉइंट याद रखिए. On 1st January, stock is valued at 10% below cost. On 31st December, the stock was valued at 10% above cost. तो we have to bring it at cost. दोनों को भी cost पर लेकर आना. अगर below cost रहा तो 100/90. जो भी valued cost है वो valued cost को 100/90 अगर below cost रहा. अगर above cost रहा तो valued cost को 100/110. अगर ज्यादा ले लिए तो 100/110, अगर कम ले लिए तो 100/90. तो ओपनिंग स्टॉक को 100/90 लेंगे, क्लोजिंग स्टॉक को 100/110 लेंगे. That's all. So we have seen the problem, we have understood the contents of the problem. Now we'll see the solution. Now carefully. Trading account of Amir Chand for the year ending 31st December 2003. Last year. So last year opening stock 2,70,000. It is given in the problem. स्टार्टिंग में दे दिया कि 1 जनवरी 2003 का ओपनिंग स्टॉक 2,70,000 था. एंड दिस 2,70,000 इज कॉस्ट लेस 10% गिवन इन द लास्ट लाइन. प्रॉब्लम की लास्ट लाइन में दिया कि कॉस्ट लेस 10% था. अब उसको बढ़ाना है तो 100/90. 2,70,000 इंटू 100/90. बिलो कॉस्ट है इसीलिए 100/90. तो एक्चुअल कॉस्ट कितना हो गया उसका? 3 lakh rupees is the actual cost. So we have taken actual cost. Purchases last year given, wages last year given, sales last year given 25 lakh. 2003 ka sales 25 lakh, no adjustment, nothing given in the problem. Closing stock 31st December 2003, the stock value is given 4,84,000 and it is given that the stock was valued 10% above cost. या below cost था, यहां पर above cost. बिलो कॉस्ट है तो 100/90, अबव कॉस्ट है तो 100/110. 100/110. तो 4,84,000 into 100/110, 4,40,000. This is the actual cost. Actual cost 4,40,000. Loss by fire. Last year also 2003 में भी फायर हुआ था. वो टाइम पे 90,000 रुपीज के स्टॉक डिस्ट्रॉयड हुए थे. That 90,000 will take it on the credit side. Right? Now we'll find out the balancing figure, gross profit. तो क्रेडिट साइड यू टेक द टोटल 30,30,000. 30,30,000 में से डेबिट किया 1 2 3 आइटम्स माइनस कर दो. द बैलेंसिंग फिगर 5 lakh rupees इज द ग्रॉस प्रॉफिट ऑफ लास्ट ईयर. तो व्हाई वी हैव प्रिपेयर्ड दिस ट्रेडिंग अकाउंट? टू फाइंड आउट द ग्रॉस प्रॉफिट, टू फाइंड आउट द रेशियो ऑफ ग्रॉस प्रॉफिट ऑन सेल्स. द ग्रॉस प्रॉफिट वाज 5 lakh, sales was 25 lakh. तो व्हाट इज द परसेंटेज रेट ऑफ ग्रॉस प्रॉफिट ऑन सेल्स? GP by sales into 100, 5 lakh by 25 lakh into 100, 20%. तो प्रॉब्लम में GP रेशो नहीं दिया तो ये अकाउंट बनाकर हम GP रेशो मालूम करें 20%. नाउ वी अप्लाई दैट GP रेशो ड्यूरिंग द करंट ईयर 2004, द ईयर ऑफ फायर. नाउ मेमोरेंडम ट्रेडिंग अकाउंट ऑफ Amir Chand for the period ending 10th April 2004. Last year's closing stock will become current year's opening stock. 2003 का जो क्लोजिंग स्टॉक रहता ऑटोमेटिकली 2004 का ओपनिंग स्टॉक हो जाता. तो हाउ मच इज द क्लोजिंग स्टॉक हियर? 4,40,000. दिस 4,40,000 क्लोजिंग स्टॉक विल बिकम ओपनिंग स्टॉक. टू ओपनिंग स्टॉक 4,40,000. परचेजेस गिवन इन द प्रॉब्लम, नो एडजस्टमेंट, नथिंग. 2004 के परचेज ले लिए, 2004 के वेजेस ले लिए. और जीपी it is given in the problem. No, we have calculated the percentage of GP. We have calculated 20% on sales. The gross profit is 20% on sales. So 20% of 10 lakh. Sales are 10 lakh. So 10 lakh ka 20% 2 lakh. That's all. So we have taken all the items on debit side. Take the total 14 lakh 50,000. From 14 lakh 50,000 subtract 10 lakh. The balancing figure closing stock 4 lakh 50,000. तो ये मेमोरेंडम ट्रेडिंग अकाउंट बनाने का पर्पस ये है टू फाइंड आउट द क्लोजिंग स्टॉक. वी गॉट इट 4,50,000. This is the stock on the date of fire. The stock on the date of fire is 4,50,000. From 4,50,000 we subtract the salvaged value, scrap value, saved. How much stock is saved? 50,000. तो destroyed 4 lakh. तो 4,50,000 रुपए का स्टॉक था जिसमें से 50,000 रुपए का स्टॉक बच गया, जला नहीं. तो कितना जल गया, कितना डिस्ट्रॉय हो गया? 4 लाख रुपीज स्टॉक पर डिस्ट्रॉयड. नाउ एवरेज क्लॉज इज अप्लाइड. एक्चुअली 4 लाख रुपीज का स्टॉक डिस्ट्रॉय हो गया, लेकिन इंश्योरेंस कंपनी विल नॉट पे 4 lakh because there is under insurance. How we can say there is under insurance? What is the policy amount taken? 3,60,000. In the first paragraph it is given policy taken is 3,60,000, whereas stock on the date of fire is how much? 4,50,000. Stock on the date of fire is 4,50,000, whereas policy amount is 3,60,000. So 3,60,000 by 4,50,000 into 4. So when average clause is applied, then if average clause is applied, then amount to be claimed from insurance company is stock destroyed into policy amount divided by stock on the date of fire. So stock destroyed 4 lakh, policy amount 3,60,000 divided by 4,50,000, that comes to 3,20,000. So 3,20,000 is the amount of claim to be made from the insurance company. That's all. This is the end of problem number 9. Now we'll start problem number 10. See the 10th problem. Fire occurred in the premises of X on 1st April 1998. Remember the date. And a considerable part of stock was destroyed. The stock salvaged was 56,000. Salvage value will be deducted from the stock on the date of fire. A fire insurance policy of for 3,42,000 was taken to cover the loss of stock by fire. If the policy amount is given, that means average clause is applied. Previous problem also the policy amount was given, average clause was applied. Here also average clause will apply. Was taken to cover the loss of stock. You are required to ascertain the insurance claim which the company should claim from the insurance company for the loss of stock by fire from the following particulars. Insurance policy contained average clause. So even if it is not given, we assume there is average clause because policy amount is given. Right? Purchase for the year 2003. Actually, the date is given wrong. It is 1st April 2004. In the first line of the problem, it is given 1st April 1988. So it is printing mistake. That is 1st April 2004 was the stock date of fire. Purchase for the year 2003, last year. Just like the previous problem, we have to prepare the trading account of last year 2003. Purchase for the year 2003, sales for the year 2003. So last year purchase, last year sales. Purchase from 1st January 2004 to 1st April 2004. Current year. From beginning of the year to the date of fire. Purchase. Sales from 1st January 2004 to 1st April 2004. So current year sales. Stock on 1st January 2003. Last year's opening stock. And stock on 31st December 2003. Last year's closing stock. Then wages paid during 2003, last year's wages. And wages paid during the current year, 1st January 2004 to 1st April 2004, current year's wages. Fire also broke out on 21st December 2003 and destroyed stock to the estimated cost of rupees 1 lakh. Just like the previous problem, there was a fire in the last year also. So when we make last year's trading account, credit side we will take loss by fire. 1 lakh rupees stock destroyed. There was a practice in the concern to value stock at cost less 10%. But this practice was changed and the stock on 31st December 2003 was valued at cost plus 10%. Exactly similar to the previous problem. Exactly similar. On 1st January 2003, there was a policy to value the stock at cost less 10%. And 31st December, the policy has been changed. Now, the stock is valued at 10% above cost. तो below cost अगर वैल्यू करें तो 100 by 90, above cost अगर वैल्यू करें हैं तो 100 by 110. This point you remember to bring the stock to its cost. Exactly similar to the previous problem. Now see here, trading account of X for the year ending 31st December 2003. Opening stock 2,88,000 into 100 by 90, because it is valued 10% less. So 3,20,000. Then purchase given in the problem, wages given in the problem, sales given in the problem, closing stock 4,84,000. It is given that it was valued 10% above cost. End of the year policy changed, 10% above cost. So 100 by 110, it comes to 4,40,000. By loss by fire, just like the previous problem, by loss by fire 1 lakh. So balancing figure, you are getting gross profit balancing figure 4,64,000. Balancing figure. Take the total on the credit side, 28,60,000. From 28,60,000, subtract these three items, 4,64,000 gross profit. Now we'll find out what is the rate of gross profit on sales. The rate of GP on sales, GP by sales into 100, 4,64,000 by 23,20,000 into 100, 20%. The gross profit ratio is 20% on sales. Now that will apply during the current year. Memorandum trading account for X for the period ending 1st April 2004. To opening stock 4,40,000. See here, last year's closing stock automatically will become current year's opening stock. So last year closing stock 4,40,000. This 4,40,000 opening stock. Purchase given in the problem, wages given in the problem. And gross profit is given 20% on sales. Sales are given here 4,80,000. So 20% of 4,80,000, 96,000. 96,000. Now balancing figure closing stock 4,56,000. So this 4,56,000 is the stock on the date of fire. Stock on the date of fire is 4,56,000. So stock on the date of fire 4,56,000 minus stock salvaged. Stock salvaged given in the problem 56,000. So stock destroyed is 4 lakh. Stock destroyed 4 lakh. Now the insurance company will not pay 4 lakh rupees. Will not pay 4 lakh rupees because there is under insurance. How under insurance? The policy amount is given as in the problem as 3,42,000. In the first paragraph it is given the business has taken a policy for an amount of rupees 3,42,000. Whereas how much is the stock on the date of fire? 4,56,000. Stock on the date of fire is 4,56,000, whereas policy is taken only for 3,42,000. There is under insurance. When there is under insurance, average clause will be applied. When average clause applied, amount to be claimed from the insurance company is stock destroyed into policy amount divided by stock on the date of fire. So how much is the stock destroyed? 4 lakh. Policy amount 3,42,000. Divided by stock on the date of fire 4,56,000. So if you simplify, you are getting 3 lakh. The amount to be claimed from the insurance company is 3 lakh rupees. हालांकि goods destroy हो गए 4 lakh rupees, but insurance company will pay only 3 lakh rupees. 1 lakh rupees is the loss to be borne by the business itself. Why? It has taken under insurance. That's it. This is all about problem number 10. 11th problem. See the students, 11th problem. On 15th June 2005, the premises of fire and stone were destroyed by fire, but sufficient records were saved from which the following was ascertained. The date of fire 15th June 2005. Now, stock at cost on 1st January 2004, stock at cost on 31st December 2004. We are given the data for the last year to find out the GP ratio. So we have to make a trading account of 2004 to find out the gross profit and to find out the ratio of gross profit on sales. That will be applied during the current year, date of year of fire. Purchase less returns year ended 31st December 2004, last year's purchases. Sales less returns year ended 31st December 2004, last year's sales. Then Purchase less returns 1st January 2005 to 15th June 2005. Current year, the year in which the fire occurred. Purchases are given, sales are given. In valuing the stock for balance sheet on 31st December 2004, 31st December 2004 means last year closing balance, closing stock. In valuing the stock for balance sheet on 31st December 2004, 2,300 had been written off certain stock which was a poor selling line. तो कुछ abnormal stock है, poor selling line stock है. That stock was written off 2,300. But for calculating gross profit, we should take the stock at cost. So whatever amount is written off, that will be added back. So 2,300 rupees was written off. Now 2,300 we add back to the stock, closing stock of last year. And having a cost of 6,900. Actually the total cost of abnormal items is 6,900. A portion of these goods was sold in March 2005 at a loss of 250 on the original cost of 3,450. These abnormal items, these poor selling line items was sold during March 2005. So 3,450 was the actual cost, but it was sold at 250 rupees loss. So 3,450 का मतलब total cost was 6,900. Out of 6,900, 3,450 means 50%, half. Half of the goods were sold at a loss of 250. तो sale proceed कितना आएगा? 3,450 minus 250, you will get 3,200. तो 3,450 के goods को 3,200 में sell करें. कब sell करें? Current year, March में. The remainder of this stock was now estimated to be worth the original cost. अब जो आधे goods बेचे, remaining half of the goods will fetch the original price in a cost, 3,450. Subject to the above, the gross profit had remained uniform rate throughout. The stock salvaged was 5,800. Then show the amount of claim. So first of all, we make the trading account of last year 2004. So trading account of fire and store for the year ended 31st December 2004. Opening stock 73,500 given in the problem. Purchase given in the problem. Sales given in the problem. The closing stock 79,600 was the closing stock, but it is given an adjustment that poor selling line item had been written off for rupees 2,300. तो जितना भी अमाउंट राइट ऑफ करे थे उसको ऐड बैक कर देना वापस. तो 2,300 को ऐड बैक कर देंगे, स्टॉक रिटन ऑफ नाउ एडेड बैक. तो टोटल स्टॉक विल बी 81,900. दिस इज द टोटल स्टॉक. नाउ टेक द टोटल ऑन द क्रेडिट साइड 5,68,900 minus these two amounts, you'll get the balancing figure gross profit 97,400. So last year trading account we have prepared, we got a gross profit of 97,400. Now we calculate percentage of gross profit on sales. So GP by sales into 100. So 97,400 divided by 4,87,000 into 100, 20%. Over, finished. So we have prepared the last year trading account, we got a GP ratio of 20%. That GP ratio we applied during the current year 2005. Now, memorandum trading account for the period ending 15th June 2005. Opening stock. See here, the last year's closing stock will become current year's opening stock. How much is the closing stock? 81,900. 81,900. But this total 81,900 consists of abnormal items and normal items. We need the sale or we need the stock of only normal items. हम जब कैलकुलेट करेंगे तो पहले नॉर्मल आइटम्स को मालूम करेंगे. तो व्हाट इज द एक्चुअल कॉस्ट ऑफ ऑल द एबनॉर्मल आइटम्स? 6,900. द एबनॉर्मल आइटम्स जो पूर सेलिंग लाइन आइटम है उसका टोटल कॉस्ट 6,900 है. तो वी subtract 6,900 from 81,900. 75,000 is the stock of normal items. Stock of normal items. Then two purchases given in the problem. Sales 2,31,200 is given. But during this current year, the current year is 2005, the abnormal stock, poor selling line item was sold. Half of the goods were sold at 250 rupees loss. So actually total cost was 6,900. So half of 6,900, 3,450. 6,900. Out of 6,900, 3,450 worth of goods was sold. This is sold. 3,450 worth of goods are sold at a loss of 50. Loss of 250. 3,450 के गुड्स थे, उसको 250 रुपीस के लॉस पे बेच दिए, तो सेल प्रोसीड्स कितना आएगा? सेल इज इक्वल टू 3,450 माइनस 250, 3,200. So 3,200 is a sale proceed of abnormal items. This sale proceed we deduct it from the total sales. 2,31,200 में से 3,200 जो कि sale of abnormal items निकाल दो. हमको sale of normal items चाहिए. We require sale of normal items. So we subtract 3,200. 2,28,000 is the sale of normal items. Right? Now gross profit is 20% on sale of normal items. So 20% of 2,28,000, 45,600. Gross profit we got. Now take the total on the debit side, 2,82,600. From 2,82,600 subtract 2,28,000. 2,28,000. The balancing figure closing stock 54,600. 54,600 is the closing stock or stock on the date of fire. तो फायर होने के टाइम पे 54,600 का स्टॉक है. कौन सा स्टॉक है ये? नॉर्मल स्टॉक. इट इज द नॉर्मल स्टॉक. सो स्टॉक ऑफ नॉर्मल आइटम्स ऑन द डेट ऑफ फायर इज 54,600. अब इसमें स्टॉक ऑफ एबनॉर्मल आइटम्स, पुअर सेलिंग लाइन आइटम्स को ऐड करेंगे. हाउ मच इज द वैल्यू ऑफ पुअर सेलिंग लाइन आइटम्स? 3,450, हाफ. तो आउट ऑफ 6,900, half of the goods are sold away. Remaining half of the goods are lying in the stock. So 3,450 is the poor selling line item stock. The total stock will be 58,050. This is the total stock on the date of fire, which includes normal as well as abnormal, poor selling line. From this we subtract stock salvaged, given in the problem 5,800. Deduct, we'll get amount of claim 52,250. This is the amount of claim to be made with the insurance company. That's all. This is the end of problem number 11.